Good morning, ARMR Insiders. Welcome to the morning meeting to start our Thursday, July 30th. I'm going to share with you my thoughts on the trading desk, how I'm getting ready for the day. And of course, you guys can ask questions at the close of my opening comments right here in the Slack room, right? So in the Slack room, just any questions you have, I'm looking at the Slack page right now of our ARMR trading desk, and I'll answer if you got questions. All right, so let's start with a secret, an ARMR Report secret to investing success. Wait for it. You ready for this? Turn off CNBC. Turn it off. Don't watch the show while you're trading. Now, I used to be a CNBC addict, and I am in recovery. Okay? And I've been here for a long time. And let me tell you something. There was a dramatic increase in the success of my ability to run money when I turned that channel off. It's a complete waste of time. All they do all day long, in case you haven't noticed, is bring on people to argue that have completely different points of view. So this guy thinks the market's going up, this guy thinks the market's going down, and they're going to ask them questions. How is that possibly helpful to you and to me? How about fast money? I love those guys on fast money. Just love them. All they do is go around and around and around in circles, arguing about different stocks. This one's great, this one's bad, why this one's got cash, and why that guy thinks you should be on margin. I mean, it's a complete waste of time. It might be fun to listen to, I don't know, but it literally is detrimental to managing your own capital. If you want to manage your own capital, you have to come up with your action plan before the market opens and execute ruthlessly without any interruptions. And if you sit and watch that channel, or any channel like it, where they just toss around a whole bunch of hackneyed phrases, bring on different guys, right? All it's going to do is chip away at your confidence that you know what you're doing. You know what you're doing. You don't need some guy on TV to tell you, and then the guy next to him tell you that you're wrong, right? So you need an action plan, an investing plan, and you execute it, right? The ARMR Insider and ARMR Report, what I try to share with you is my action plan, right? We come in every day, we know what we want to do, we execute it ruthlessly, we don't care what they say on TV. That's how you make money and protect capital. So step one, I mean literally for me, when I turn that off, and what I have now all day long is a little CCR playing in the background, or whoever your favorite band is, okay? And go about your processes, do your research, whether it's technical or fundamental, right? And just execute your plan. Okay? That's my suggestion. When I did that, it immediately bumped up my performance as a manager and running my own money. The minute I shut that TV off. It's just worthless. Okay? And at worst, it's detrimental. Because it just confuses you and it gets you off your game. All right. Action plan. The ARMR Action Plan today and yesterday, whenever there's Fed Day, you guys, I was posting in the Slack room yesterday names that were on top of my whiteboard, stocks that I was looking at. I literally was doing research all day. And at the end of the day, we did nothing. You guys can always check the channel in this Slack room for those of you who are new. The hashtag ARMR Portfolio updates. Okay? That hashtag's all I do is update at the end of the day what I'm adding or subtracting to the portfolio. And then we update the spreadsheet. You can click on it right there and see all the stocks we bought, the prices we paid, the day we bought it, and the 3 stops that we're using for the principal protection stops. Okay? So we did nothing yesterday. And we'll do nothing this morning. And the reason for that is I don't have a statistical fact for you. I know I like to share only information that's statistically driven, okay? I don't like to do a lot of guesswork because it's a waste of everybody's time. But so this is not statistically driven, but I can tell you that most of the action around Fed days and the day after Fed day is a lot of noise, really meant to get you off the bus. If you remember the last Fed day, the day after the Fed meeting, actually the day of the Fed meeting, the market cratered and it just imploded the next day. But did that really lead to a bear market? No. That was the bottom. The low of that Thursday, which was a month ago, was the bottom. And the market ripped higher for the next month. So now we have another Fed day, and we're opening lower today, right? The market was up yesterday. Now it's down today, opening low. Who knows? We might have a nasty sell-off today. I don't know. It's just designed to get you off the bus. What the Fed said yesterday is steady as she goes. Unlimited liquidity, unlimited purchasing of bonds or whatever they have to do to support the market. All kinds of processes extended through the end of the year to support the economy and the stock market. Not even thinking about raising rates, right? Going to overshoot. Going to let the market, economy explode higher in GDP before they even think about raising rates. This is a perfect environment for the market to go higher. So it's lower this morning, right? Classic. It's lower this morning just to see if they can shake off the weak holders, and then the market reverses and goes higher. So that's the mechanical bull market that we're in. That's why I didn't make any trades yesterday. I'm probably not going to make any trades this morning, but I may be out there adding positions by the end of the day today, depending on the market behavior and the stocks that I'm looking at. And I'll share with you in a minute some of the stocks that are on the top of my board. Okay, so that's kind of the action plan around Fed Day. It's to take your time, and be patient and try to buy weakness in the midst of strength. So let's skip over to gold and silver real quick. I've been saying for the last couple of days, as we all know, every month at the end of the month, options expiration day was Monday or Tuesday for COMEX and Friday for the Bank of International Settlements, BIS. Okay, there's always shenanigans this week, lots of volatility. For those of you who've been asking me as the stocks were exploding higher, can you buy them as they're running? I say no. We buy weakness in the midst of strength. So if we're getting weakness today, maybe tomorrow morning, and one of your favorite names comes down to a moving average, that's where you could add the position. Now we don't have to add the ARMR portfolios, right? We are, full to the max on all the precious metals we need, and we started doing that late March, early April. So those of you who have been part of this process know that we've got enormous gains in this portfolio from these stocks, and periodically we trade around the core. We take some off and then we put some back on weakness. We do think there's a short squeeze unfolding. I don't think it's anywhere close to being over, but I thoroughly expect weakness at some point this week, and we're getting it this morning. So 4% down on silver, 1% down on gold. That's not really that much in the grand scheme of how these things have been traded. Okay? So if you're looking to add precious metals, you're going to get your shot today, maybe tomorrow morning. Right? You buy weakness in the midst of strength. Hey, before we move on, I want to get back to this chart of the S&P real quick. So just to wrap up the S&P thought, this is the uptrend we're in. This is an Andrews fork, it's called. Just a nice way to look at the channel that we're in. As long as we stay above the bottom of this trend here, which is also, let's say, around the 25-day moving average. Okay, so everything is, pretty much normal. If we break down out of this, it's okay. I mean, you could extend this a little bit. Could extend it a little bit, something like that. Okay, but obviously the 50-day moving average is going to be an important stop area. That's really where the S&P's stop is set. So this stock could come all the way, the S&P could come all the way down to the 50-day to test, and it wouldn't mean anything in the grand scheme of the uptrend that we're in. Okay, So let the market shake out this morning. Let it run down if it wants to. Look to buy weakness in the midst of strength. We have a strong uptrend. We look to buy weakness. So we don't buy on up days. We welcome the down days. Those are the days to look to add things. Okay? So those are my thoughts on the market there and on precious metals. Totally normal behavior. Not much to say. Now let's move on to a look of, well, that's actually Luminant, but let's take a look at AFRIA, okay? You know what, I think I'm going to show it to you on a different chart. Let's take a look at it here. I'll blow it up a little bit more for you. Okay, so there's the uptrend on AFRIA. So all we had was a run up into earnings. Earnings were perceived to be not good enough, and so the stock has given back the gains. Okay? So let me just explain this. First of all, the ARMR report, the information I share with you, looks like this. We use algorithms to put you on the meat, as they say in hot tuna, in wicked tuna, okay? The algorithms tell us when to put capital to work. We put capital to work when probabilities are at their highest that the stock will go up, and the reward from that point is worth the risk we're taking. That's the entry point. That's the information that I share with you, okay? Then what we do is we have 3 separate stop phases that we go through. The first is the principal protection stop, and you can find this on the spreadsheet. I show you the 3 logical and best stops for every stock that we buy. So when we buy it, we know exactly what we're willing to risk. Okay? And I highlight for you in boldface the stops that I'll be using personally. But you can use any of those 3 depending on the type of trader you are. If you trade more aggressively, you use the tightest stop. If you're trading less, okay, you want to have less trading activity, you're willing to accept more swings, you use the most lenient stops, okay? Then when the asset moves up a certain percentage, we raise our stop. Okay, so now it's raised stops. And I change that for you on the spreadsheet. And then, of course, once the stocks are up enough, we go to a trailed stop, which I call a profit protection stop. And that's usually one of the 3 main moving averages, the 14-day, the 25-day, the 50-day. Okay? These are terminal stops. So the information I share with you is the terminal stop. And I'll put into the Slack room, this stock is below the stop, here's how we're going to trade it today and handle the situation. It's a terminal stop. When it comes to booking profits as an asset runs, I leave that up to you. Okay? If you want to be a swing trader and book profits, have at it. AFRIA stock ran up into earnings, you want to book the profit in front of the news, more power to you. I'm going to say 2 things. 1, don't forget that at the end of a 12-month period, you look back at your portfolio and you see the capital that you made. I submit to you that a handful of names will end up being the drivers of that performance. So before you trade out of everything when it pops 10% or something, remember that you need to ride your winners as long as you can. And we never know what those winners will be until it's in retrospect and we see, holy smokes, we're up, a couple 100% on this trade. Okay? So you have to balance swing trading with riding those winners. Excuse me. Okay? I leave it up to you because we're all different. We all have different ways of trading and what feels comfortable. So the information from the ARMR report is the entry, where we're using algorithms to execute so we have the best probability of success, and then the 3 stages of trailed stops: profit protection, raise stop, principal protection, in the reverse order, okay? Those are absolutes. If it goes below those prices, we take them out of the ARMR portfolios. But if you wish to trade stocks that are running You don't have to wait for me for that. Book whatever percentage you want. I like to say trade around the core. But I'm leaving it up to you. Don't wait for me to say, go trade around the core. I don't know you. I don't know the portfolio you're running. I don't know how much capital you have to work. All of those things go into the decision of how I would trade your account. I'm not trading your account. So you guys decide how much to book when it runs and how to trade it. But when it comes to information I'm providing, it's the entry price and the terminal exits that are not to be violated. Okay? Everything else, we're working as a team here. Okay? So when we see AFRIA, what I'm saying here is, for my portfolio, I'm looking at this uptrend in the 50-day and the 200-day moving average as my stop. Now, I've earned the right to do that because I've made money. The ARMR Report has made money trading these stocks this year. We've booked profits on these stocks. So in this instance, I'm going to be letting the stock go and using this uptrend in the 200-day as my stop. I'm giving back gains, but I won't be cutting into my principal. The reason I'm doing this is I believe that we are watching these stocks bottom. This is a long-term downtrend that had been broken. An uptrend has started. It's going to be ugly. You know why? Because there's massive overhead, tons of people trapped in these names that can't wait to sell. And we have to see if those guys overwhelm the new buyers or if the new buyers eventually overwhelm those sellers. And so when we get an earnings announcement that's, quote, not good enough, boom, the stock goes down. But what are we, who was looking for a great number right now? Who's that guy? I want to know. Was it you? Who was it? Who was looking for a great number? We're in the middle of the summer of a pandemic, and these companies are in the process of trying to reduce the amount of supply of product and get supply and demand in line. If there's going to be good numbers out of these stocks, it's going to be in the fourth quarter of this year. Okay? So this is a process, and you may not want to be part of it. You don't have to be. Right? I add names to the ARMR Report that interest me as I invest. You can participate or not. Okay? So I listened to that report. I didn't see anything wrong with that report. There's still cost cutting going on. They're still closing a bunch of businesses. They're still aligning supply and demand. The whole industry is. You're not going to see any fireworks, is my guess, out of Cannabis Growth or Cronos in the next couple of weeks when they announce earnings. It'll be more of the same. Blocking, tackling, cutting costs, doing these types of things. But I am hearing anecdotally from people I speak with, from information I'm reading, that the beverage business is starting to take off. And so my question is, and of course AFRIA has got nothing to do with the beverage business. That's really a Cannabis Growth thing. I'm very curious to see what that conference call is about. So Cannabis is going to announce earnings. It's probably going to be a lot more write-downs, all the stuff we already know. The question is, are there rays of hope, and are those rays enough to get these stocks to go up? Okay? And you don't have to invest in a story like that. If we look at the ARMR portfolios and where the bulk of our success is this year, we are killing it in precious metals and disruptive growth and established growth. Anything that benefits from the new pandemic paradigm that we live in. That's where all the money is. And you should really be focusing your portfolio there. So kind of the cannabis part of my investment is almost like it's something I've been working on for a couple of years. We're making money trading them, but I keep trying them to find my way in. So when this business turns and we see the move dramatically higher, I want to try to get in somewhere down here. And so that's what I'm doing. But it's messy when you're trying to get in at the bottom. All right? But I do think that there is an interesting trend going on in the drink business. And so I'm curious to see how these stocks will react. So anyway, that's the stop I'm going to be using on AFRIA. Okay? And, of course, you can look at CGC. They're all basically the same, right? So they ran right up into earnings and then they sold off a little bit, but they're just still in tight bases. There's nothing to see here, really. Okay. Meanwhile, just we look at our entire portfolio and look at our cannabis investments, and so that's what's going on in grow generation. So grow generation is blowing out, and U.S. business looks pretty good. So let's just wrap up with a couple ideas that are at the top of the whiteboard, and then I'll get to some questions. I'm going to share with you QRVO, blowout earnings. We already own this stock in the portfolio. And so when I say add it to the whiteboard, what I really mean is this stock could be a bigger position in a portfolio. That was a blowout quarter. Stock is up about 5%. I think the stock would be up a lot more if the market weren't down 1%. Okay, so we're going to see how the stock trades this morning and see how the market trades. And if there's an opportunity, we may be adding to this position at some point today. Then I would expect Xilinx to have a good quarter as well. Now we're in here at around 101.82, so I'm not sure I'm going to be adding to it, but this company is going to announce earnings soon. And all the 5G guys are absolutely blowing out. I mean, look at this. Look at the stocks. Ciena's breaking out, right? These are all ARMR Portfolio positions. We picked up Infinera right here, like literally day one of the move. The stock is blown out. Okay, these are all 5G plays. This is where the profit center is for us. 5G, disruptive growth. Okay? So we're going to try to stay focused there. Now, for conservative accounts, I might be adding shares at Target. These stocks are all going up. And Target is in this beautiful basing pattern. So if you look at this chart pattern here, let me just share with you the O'Neill chart. I mean, that's just a classic cup and handle on Target. Weekly chart. That's a beautiful chart pattern. And all of these stocks are blowing out with earnings. So that might be a name that we add to the portfolio today. Okay, top of the whiteboard stuff. And then I'm just going to round it out with this thought. I might have overthought this. This is one of my favorite cannabis stocks, and I'm not here right now, and I'm wondering, I think I probably should be. So stock blew out above 100. Let's see what the stock looks like it's doing this morning. Well, it's not really. Doesn't show a bidder offer yet. But suffice it to say, I'll probably look to buy some weakness this morning. If we get weakness this morning and we get weakness in this stock back down towards 100, that might be a stock we put in the portfolio. Saw rising volume yesterday, relative strength breaking out with the stock, beautiful bottom. Okay, so those are the stocks we're looking at. Now I'll get to some questions. Let's take a peek. Anything you guys got for me? Ethan's looking at swinging AGQ. Yeah, I mean, look, if you don't own it and the stock is down 8% today, you're going to get a shot. Down 9% today. Absolutely. I wouldn't be too concerned about silver below 23. This is the type of volatility you're going to get, particularly at the end of the month. When it comes to the earnings announcements of Newmont Mining and Kirkland Lake, whether they beat or don't beat has nothing to do with the stocks going up or down. This has purely to do with the price of the metal. And so the metal's down today, and so the stocks are down a little bit today. It really doesn't make a difference what the earnings numbers are. In fact, I think we saw revenue beats, I think it was. Because of course the price of the metal is going up. All right, take a peek at PayPal. You're asking me to look at PayPal? This stock is in the stratosphere. How am I going to add this to the portfolio, Ken? I mean, I see what you're saying. You're saying here's a tight formation and it's breaking out of that high tight pennant. I mean, you certainly could add to it a high tight pennant. You'd have to be very strict on your stop. I mean, I would use a low of the day I bought as my stop, or probably yesterday's low. certainly the 25-day moving average. So you could do that. It's a follow-on trade. It's a follow-on trade. So, all right, guys, listen, I will see you in the Slack room. Thanks for joining me, and we'll see if we can have a great trading day today. All right?